Hello, traders, and welcome back to Explain the Charts. Today, September 25th, 2025, we're diving deep into an in-depth analysis of the USDCHF currency pair, combining the very latest news with a comprehensive look at the price action. Our goal is to give you a clear picture of trends, potential reversals, crucial support and resistance levels, and key price points to watch when considering your next trade. We'll be navigating through the 1-day, 1-hour, and 15-minute timeframes to capture both the long-term narrative and the immediate trading opportunities. First, let's set the stage with the macroeconomic factors currently influencing USDCHF. The Swiss National Bank, or SNB, has maintained a remarkably dovish stance, notably implementing a series of interest rate cuts. A significant move occurred on June 19, 2025, when the SNB cut rates to an unprecedented 0%, a decision that, in isolation, should weaken the Swiss franc and boost USDCHF. However, market dynamics are rarely that simple. We've seen headlines referencing dollar dump events, signaling periods where the US dollar itself has faced considerable selling pressure. These instances of USD weakness have often negated the positive impact on USDCHF that the dovish SNB policy might otherwise have created, leading to a complex tug-of-war. An Investing Live report from late August, specifically August 28, 2025, provided a crucial insight. USDCHF initially fell into a key swing area between 0.7986 and 0.7994. The report confirmed that sellers pushed the low to 0.7993, but this level was strongly defended by buyers, leading to a subsequent rebound. Despite this short-term recovery, the broader market sentiment around that time for USDCHF was characterized as choppy and indecisive over several weeks, with a persistent, broader tilt to the downside. The 100-hour moving average was noted as an upside resistance target at 0.80356, indicating a struggle for bullish momentum even then. Now, let's shift our focus to the charts themselves. We're starting with the 1-day time frame, giving us a macro view of USDCHF's journey over the past year and a half. What immediately jumps out is a pronounced long-term downtrend, characterized by a consistent pattern of lower highs and lower lows, indicating strong bearish control. The pair began a significant descent from highs around 0.91 in May 2024, gradually losing ground throughout the year. The price action in late 2024 showed some consolidation and a slight rebound towards the 0.90 to 0.91 area in December 2024 and early January 2025, but this proved to be a temporary reprieve. The correlation with the SNB's rate cuts is intriguing. While the June 2025 cut to 0% should have bolstered USDCHF, the daily chart shows a sharp acceleration of the downtrend from April to June 2025. During this period, USDCHF plummeted from around 0.88 down to the 0.79 handle, suggesting strong counterforces, likely related to broad US dollar weakness, overwhelmed the SNB's dovishness. Let's zoom in on the daily chart for the past few months, focusing on the recent developments around the critical support zones. We can clearly see the price action around the critical 0.7986 to 0.7994 support zone mentioned in the August 28 news. Indeed, on August 28, 2025, the daily low was 0.7991, which perfectly falls within that reported swing area, and the candle closed higher than its open, confirming the initial defense of support. However, the bearish pressure persisted, and by early September, this important support level was unequivocally breached. This breakdown led to a fresh multi-year low of 0.78508 on September 16, 2025, which now stands as a critical short-term support level to monitor. The close for September 24, 2025, at 0.79471 indicates some recovery from those recent lows, but the pair remains firmly entrenched in bearish territory. Well below the previously strong 0.7986 to 0.7994 zone. Now let's switch to the 1-hour chart to analyze the more recent, medium-term price movements from early September. This time frame provides a closer look at the intraday volatility and short-term trends that traders often focus on. We can observe the choppy and indecisive behavior mentioned in the news extending into the first week of September. A notable event here is the sharp drop on September 5, 2025, where USDCHF fell swiftly from above 0.803 to approximately 0.797 within hours. This rapid decline reinforces the underlying bearish sentiment and the dollar's vulnerability, even on an intraday basis. Throughout this period, attempts to push higher, such as towards the 0.805 level in early September, were met with selling pressure, confirming resistance at these short-term peaks. Following this volatility, the pair largely consolidated, trading within a tighter range, mostly between 0.792 and 0.796, across September 8th and 9th. This consolidation suggests a battle between buyers and sellers, but with bears still having the upper hand, as indicated by the subsequent downward moves on the daily chart. Next, we'll hone in on the 15-minute chart to get the sharpest view of the very latest price action, specifically from September 19th to September 24th. This detailed perspective is invaluable for pinpointing immediate entry and exit points and understanding current market sentiment. We can clearly identify a significant bearish move on September 22nd, where the price steadily declined from around 0.796 to approximately 0.792. This aligns directly with news reports from around that time, signaling USDCHF tumbles on dollar dump, a clear manifestation of that immediate bearish pressure. Following this sharp drop, the pair entered a consolidation phase, trading largely sideways between 0.791 and 0.795 throughout September 23rd and 24th. This tight range indicates a current equilibrium, but one that is fragile and susceptible to breaks in either direction. For short-term traders, the 0.795 level has proven to be an immediate resistance, having been tested and held on multiple occasions yesterday, September 24th, especially in the afternoon. Conversely, the 0.791 level is acting as crucial immediate support, preventing deeper slides during the previous bearish waves on September 22nd and 23rd. Breaking below 0.791 with conviction would signal a reignition of the bearish trend on this short time frame. Now, combining our technical and fundamental analysis, let's consider the arguments for bullish and bearish scenarios for USDCHF. A potential bullish reversal, particularly in the short term, would heavily rely on a substantial shift in the U.S. economic outlook. Surprises to the upside in upcoming U.S. CPI or employment data, or a hawkish pivot from Federal Reserve officials, could ignite a significant dollar rally. Technically, a clear break above the immediate 0.795 resistance on the 15-minute and 1-hour charts would be the first bullish signal. This would need to be followed by a successful reclamation of the more significant 0.7986 to 0.7994 former support zone on the daily chart to confirm a sustained reversal. However, the overwhelming evidence, both fundamentally and technically, points towards a continuation of the bearish trend. The SNB's aggressively dovish monetary policy, while aimed at weakening the franc, has been outmatched by broader U.S. dollar weakness. The consistent lower highs and lower lows on the daily chart, coupled with the definitive breach of the 0.7986 to 0.7994 support zone in early September, reinforce this bearish outlook. For bears, a decisive break below the 0.791 immediate support on the lower timeframes would likely lead to a retest of the September 16th low of 0.78508. If 0.78508 fails to hold, we could see the pair explore significantly lower territories, as there's not much historical price action at these levels in the provided data. Therefore, a strategic approach might involve looking for short opportunities on rallies towards resistance, particularly if those rallies show signs of exhaustion. In summary, let's outline the most critical price levels and potential scenarios for USDCHF. For the bullish scenario, watch for a clear break and hold above 0.795, which is our immediate short-term resistance. Confirmation of a bullish turn would come if it reclaims the 0.7986 to 0.7994 zone, a former daily support that now acts as resistance. The likelihood of a significant bullish reversal in the short term, meaning over the next few days to a week, is estimated at around 30 to 40%. This possibility would be strongly reinforced by unexpectedly positive U.S. economic data or a more hawkish shift in Federal Reserve communication. On the bearish side, continue to monitor the 0.791 level as immediate support. A decisive break below 0.791 would likely lead to a retest of the 0.78508 multi-year low established on September 16th. The probability of this bearish continuation, targeting 0.78508 or potentially even lower, appears higher, perhaps 60 to 70%, given the prevailing long-term trends and recent news. Beyond 0.78508, the chart doesn't show immediate historical support, so further downside could be quite rapid and significant. Keep a close watch on trading volume. A high-volume breakout or breakdown from these identified key levels will add substantial credibility to the move. Also, be mindful of any geopolitical events or unexpected central bank interventions, as these external factors could swiftly alter the fundamental picture. Always remember to implement sound risk management strategies, including appropriate stop-loss orders and careful position sizing. Thank you for joining us on Explain the Charts for this in-depth USDCHF analysis. Don't forget to like this video, subscribe to our channel for more valuable insights, and hit the notification bell so you don't miss our next update.